Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 310 on February the 16th, 2024. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Cleanspark Inc, Li Auto Inc, and Riot Platforms. And we discuss three new trades on Blink Charging Company, Lyft Inc, and Toast Inc Class A shares. Now, it's always great to hear from listeners. If you have any questions about the trades presented on today's show or even some of your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab or visit the YouTube channel for the Weekly Option. Now, the financial markets finished the week lower for the second time since before Thanksgiving. The Dow Jones Industrial Average lost 43 points, closing at 38,627 points. The S&P 500 index lost 21 points, ending the week at 5,005 points. And now it's time for the topic of the week. The topic of the week this week is overthinking your trades. Now, one of the things I really love about my listeners is that many of you are active traders. That means that the things I discuss on the show are not purely theoretical. You're putting them to action in real life. The topic this week might hit a nerve or two for some of you. So how often have you done all of your analysis, you found the trade that you're sure would work, and then you found reasons not to put it on? Something tells me I'm not the only guy in the room who overthinks trades. I had a great week this past week trading just by getting over this habit. Sometimes you just need to pull the trigger. That's it. No motivation speech needed. Make the trade. Have a backup plan for what you'll do if the trade does not work, but make the trade. If you're consistently making money on trades that you don't execute, meaning it would have made money if you had done something, start taking the trade. Most of all, it gets you in the habit of actually trading, not just thinking about trading. This is not advice for a beginning trader. I am specifically speaking to those of you who have been at this for a little while and you know exactly what to do. If the trade that you have considered, or sometimes the trades, plural, that you've considered doing are typically losing money, then I'm not speaking to you. But if you're the opposite, if you're making money on these trades and you're not pulling the trigger, then this is exactly what you need. I'm speaking to those of us who need a little more confidence in order to take the next step. Just get in the game. And if you need a little extra help beyond that, shoot me an email. We can definitely have a phone call. I'll give you a pep talk. I'll give you a swift kick in the you-know-what. Whatever it needs, whatever you need in order to take that next step, let me know. I'm here for you. So let's get into the review of last week's trades. We'll start off with the cover call on Cleanspark Inc. Symbol C as in Charlie, L as in Lima, S as in Sierra, K as in Kilo. At the time, the stock was trading for $10.50 per share. I looked at buying stock and selling the March 11 call at $1.55, hoping for a return of 19.52% in 5 weeks. Well, shares of Cleanspark grew $7.36, ending the week at $17.86 per share. The call option we sold grew $6.05, leaving us with a net profit of $1.31 if we were to close the trade out immediately. Now, of course, we stand to lock in a total profit of $2.05 if the stock remains above $11 at expiration. And right now it's looking pretty good. So this trade has definitely worked out so far. The biggest question now is whether you believe the stock will continue to rally. If so, it might be worth buying the call option back just so you can let the profit grow from the stock movement. Now, I'm likely to lean towards letting this one ride until March expiration is a little bit closer. And I'm more than being happy with the profit of 19.5%. So that's it for the cover call. Let's get into the credit spread from last week. We looked at Li Auto Inc, symbol L as in Lima, I as in India. At the time, the stock was trading for $30.50 per share. I looked at selling the March 30/29 put spread at 37 cents, which could give us a maximum possible loss of 63 cents per spread. Well, shares of Lee Auto grew $1.14, ending the week at $31.64 per share. The out of the money put spread that we sold is now even more out of the money, which is great. With stock above $30 per share, we'll look for this spread to expire out of the money and worthless. So no adjustments are needed on this trade either, but it is important, as always, to keep track of the stock over the coming 4 weeks until expiration. Our final trade from last week was a debit spread on Riot Platforms, symbol R as in Romeo, I as in India, O as in Oscar, T as in Tango. At the time, the stock was trading for $13.05 per share. I looked at buying the March 13 call spread for 52 cents, which could give us a maximum gain of 48 cents, or that's a 92.31% return in 5 weeks. Well, shares of Riot Platform gained $3.40, ending the week at $16.45 per share. Then the money call spread that we bought is still in the money. And if stock prices expire above $13 per share, we'll look to lock in or to ultimately earn that 92% return, that profit on this trade. So no adjustments are needed on this trade either. Obviously, it's hard to beat a 92% return. That's looking pretty likely. So keep track of the stock over the next 4 weeks, and let's keep our fingers crossed, but not just hope. Let's have a game plan of what to do in case the debit spread goes against you. So that's it for the trade review of last week's trades. Of course, today, February the 16th, is expiration for all February monthly option positions. Any monthly February options you had on have either expired worthless or are being priced at intrinsic value. So hopefully you guys made some money. Hopefully you had a great week as well. All trades on today's show will use the March 15th expiration for monthly options in the month of March. So let's go ahead and dive into the new trades. We're going to start off with a cover call on Blink Charging Company, symbol B as in Bravo, L as in Lima, N as in November, K as in Kilo. The stock ended the week at $3.35 per share. I'm looking at buying stock and selling the March 3.5 call at 44 cents, hoping for a profit of 17.61% in the next 4 weeks. Now you enter this trade by buying stock for $3.35 per share and selling the March 3.5 call at 44 cents. This trade makes the most money if stock expires above $3.50 per share. Our break-even price on this trade is $2.91, and in real terms, we'll spend $335 to buy the stock, and we will collect $44 for selling the option. Next up is going to be a credit spread. I'm looking at Lyft Inc., symbol L as in Lima, Y as in Yankee, F as in Foxtrot, T as in Tango. The stock ended the week at $17.91 per share. I'm looking at selling the March 17-16 put spread at 31 cents, which could give us a maximum possible loss of 69 cents per spread. Now you enter this trade by selling the March 17 put at 81 cents and concurrently buying the March 16 put for 50 cents. This is a credit spread because we are selling the spread, and this spread makes the most money if stock expires above $17 per share. The break-even price on this trade is $16.69 per share. In real terms, you'll collect $31 per spread that you sell and have $69 at risk. Our final trade on the week is going to be a debit spread looking at Toast Inc. Class A shares, symbol T as in Tango, O as in Oscar, S as in Sierra, T as in Tango. The stock ended the week at $22.42 per share. I'm looking at buying the March 21-22 call spread for 66 cents, which could give us a maximum gain of 34 cents, or that's a 51.52% return in 4 weeks. Now you enter this spread by buying the March 21 call for $2.08 and concurrently selling the March 22 call at $1.42. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $22 per share. Our break-even price on this trade is $21.66 per share, and in real terms, we'll pay $66 to enter the spread, and your maximum gain is $34 per spread. So that's it for this week's show. Thank you guys so much for listening. Once again, last week I made the show a little bit early because I was on a ski trip, but I am back in the saddle this week. I've had a great trading week. Things are good. I'm going to focus. I'm going to do some analysis this weekend to get ready for next week. And of course, we have President's Day on Monday, February the 19th. So the market will be closed, but expect to come out of the gates on fire on Tuesday morning and ready to execute some trades. So hope you guys have a great weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.